Hello, it's Alex from Prosperity Finance. Today I'm going to share with you something that we've recently noticed about Westpac's lending policy and how they calculate clients' existing home loan repayments. With this calculation, in some situations, a client can borrow much more than other banks. Before the introduction of CCCFA regulation at the end of last year, lending policy from each bank all have their own characteristics. Different lenders will have different appetite for different kinds of clients. So when a client comes along, it's very easy to see which lender fit their needs better. But after the introduction of CCCFA, all lenders are very busy in complying with the regulation, so all their policies became very generic and there's not much difference going on between each lenders. So at one time, we even see, if we plug in details of clients into our calculator, we can see that almost all major banks can lend out the same amount of money. But since then, the things have been dialed down or settled down a bit, and we started to see some uniqueness again. Just like something we can talk about, just like the thing that we talked about today, how Westpac calculates clients' existing home loan, which may allow the clients to borrow more than other banks. So to start with, we need to have a bit of basic understanding of how the loan approval or assessment works when you submit an application. So the general idea is very simple. The lender will look at your total income and your total expense. After subtracting your total expense, you will have a certain amount of money that's left in your account each month. So each lender will have a rule or threshold of how much money you have to have before this loan can be approved. So as long as that amount of money left in your account is higher than the threshold, your loan can be approved. So how this is to do with the existing loan repayment calculation? Well, the loan repayment obviously is part of your expenses, and there's no lender out there will use your actual loan repayment figure to do the calculation. So each of them will have their own rules, and by tweaking these rules, we'll have slightly different strategy or selection criteria for what kind of clients they want. So in this case, Westpac has done something very different from other banks, and under certain criteria, especially if you have a relatively low fixed rate right now and have a significant amount of existing home loan, in these situations, Westpac potentially can lend you much more than other major banks. We'll have a look at the example to see what the differences are. Okay, so let's look at a couple of examples to see how this calculation from Westpac may potentially allow clients to borrow much more than other banks. For comparison reasons, we have this imaginary family, which has 2 adults and 2 kids. Each parent earning $90,000 per year gross. Then they're also contributing 3% of KiwiSaver. And in addition, they have a credit card with $2,000 limit. The first scenario would be that if they do not have any lending, they do not have a home, so they're just trying to borrow money to buy their first home. In this case, we can see if we compare to another major bank, ANZ, the 2 banks can lend them almost the same amount of money. In fact, Westpac is slightly higher, about I think less than $15,000 more than ANZ. But then if we look at the second scenario, the same family, but now say if they already had a home and have a existing borrowing of $800,000 with a fixed interest rate of 3.45, maybe they fixed it at the end of last year for 1 year. And then now they're trying to buy a investment property with an expected rental income of $600. Still comparing between Westpac and ANZ. Now, because of the existing loan amounts, Westpac is able to lend potentially $160,000 more than ANZ. Then if we look at another example with more extreme sort of scenario, now the same family, they are experienced property investors, and they've already owned 3 investment properties with a combined weekly rental income of $2,200. Now say they are wanting to buy a 4th rental property, again with an expected rental weekly rental income of $600. And now they have a even bigger existing home loan, 1.5 mil in this case. We can say under this scenario, because of the larger home loan amount, existing home loan amount, Westpac is potentially able to lend out even more than the second scenario. Now there's a $290,000 difference. So in summary, there are 2 things that's really going to affect, it's important to see if you're able to take advantage of this special calculation from Westpac. One thing is that you do have to have an existing home loan, and the bigger the loan amount, the bigger the potential difference is going to be. And secondly, the existing home loan interest rate, they have to be low. Generally, they need to be lower than 4 or even lower than that in order to give you the full effect. But if you are thinking about if you can, how much you can borrow, and if Westpac is a good lender for you, more than welcome to contact us, and we'll run through a review for you and let you know what's the best option. Okay, that's it for today. Thank you so much for joining us, and see you next time.